Okay, so this is for the subject strategic business analysis, and this video will be about strategic market analysis. So we have here an article from pestelanalysis.com. So to begin, what is strategic market analysis? Okay, so essentially it's something vague and quite difficult to define, but the article did try. It has no dictionary definition. It can be understood as any market analysis which pertains to an individual business strategy or to business strategy as a whole. And then the goal of strategic market analysis is to help the business or the enterprise of all sizes make educated business decisions, especially as related to strategy. So we have, market analysis. When we say market analysis, you're trying to study the audience, the market, the customers, their behavior, their response to the changes in the market. And then, of course, as a business, you have a share of the market and you want to have, more share of the market so that you can, rack in or get more revenue or sales for your business, which would, support the operations of the business. So essentially, strategic market analysis is, a market analysis with the use or with the implementation or with the application of strategies as defined by your own business. Okay, so in earlier videos, we've talked about strategy. Essentially, it's a plan made by the business for them to achieve their goals and objectives, and essentially all their actions, all their plans would have to be aligned to those goals and objectives. Okay, essentially the main point would be of every decision that they will make is to achieve those goals and objectives. Okay. Understanding strategic market analysis, so it isn't fully developed or defined as a concept because, for one, it's very generalized, and for it to be very detailed, you'd have to create one for a particular industry or a particular product or a particular market group. Okay, because the details would really depend on the industry, the product, and the market group. Okay. It's not the same for every business, but it could be the same for businesses in the same industry. And so it's kind of hard to conduct because, you essentially don't have a benchmark unless the leading company in that particular industry is doing one. And so that could be your benchmark. But for you to do it as, the first business to do it for your particular industry and business, then it would really be a little difficult. Okay. To understand strategic market analysis, they took each word at face value. That's why we say that strategic market analysis is any market analysis which pertains to business strategy. So essentially, it's part of the business strategy because, the market is where the money comes from. Okay. For you to make sales, for you to generate revenue, then you have to have a deeper understanding of the market, okay, the people who buys your product or services. So there's definitely some ambiguity here, which is mostly caused by the ambiguity of the word strategy. Okay, as we've defined, essentially strategy refers to an individual plan or set of steps that an organization is executing to achieve a specific goal. So for others, it refers to an organization's overarching approach to business, especially as related to business development and growth. Because, strategic goals and objectives, they have growth and stability there, and of course, survival and sustainability, okay, among others. So those are valid definitions of strategy. And to relate that to market analysis, so essentially you're just using the strategies or you're incorporating the plan into how you study the market. Okay, so we have here approaches to strategic market analysis. So I think they provided 3. We have the Swot analysis: strengths, weaknesses, opportunities, and threats. Okay, so this is very popular, very well known type of analysis. So we have the internal factors, the strengths and weaknesses of the business. So these are easier to determine because it's normally observable within the business, right? Because these are internal factors. And then you have your opportunities and threats, external factors, a little more difficult to determine because these are external. Sometimes there will be opportunities that not readily observable or not readily seen. And then also with regards to threats, especially with competition among the industry, it's quite difficult to determine which of the companies in the industry is more threat compared to the others, right? Sometimes, they would assess the competitors and they will think that, nah, this one's not that threatening, or this one, the leading company, would be the largest threat that we have. But then you never know if any of the small players would have, some cards up their sleeves and, essentially innovate the product and introduce something else to the market that would get them a larger share of the market. Okay, that could happen, and that's a threat, right? So all those information, you have your strengths, weaknesses, opportunities, and threats. Those can be used to mold a business overarching strategy. So essentially the approach there is, of course, to maintain the strengths, make it the advantage of the business, and then for the weaknesses, have to overcome them or eliminate them. And then you have your opportunities, maximize the opportunities, make sure that all the benefits that could be gotten from the opportunities, they should be maximized as well. And then for the threats, they should be as much as possible eliminated, right? But of course, since these are external factors, normally with regards to competition, not really removable as a whole, but you could, make plans to counter the effects of those threats. If a competitor is innovating products, then you better make sure that you are also doing some innovation and the product that you're going to introduce to the public or to the market is much better than theirs, right? So there you have it for the SWOT analysis. You can also apply SWOT to any individual business venture, which would help analyze the strategy for that single venture. Okay. And for the PEST analysis, not sure if you should read it as Pest analysis because it doesn't sound right. It doesn't sound good, right? So PEST analysis is another incredibly popular market analysis tool. This time you look at the political, economic, social, and technological factors affecting a given market or industry. So again, it would depend on the industry. Some industries are not affected by certain factors, but others, they are very much affected. Let's say for political, of course, you have your politicians, you have your political parties, and sometimes they do introduce laws or bills that could affect how certain businesses and certain industries would be conducted. Like you have your steam products, liquor and cigarettes. Normally, you would see increasing tax rates being imposed on them over the years. And again, if there are certain politicians who'd like to increase those taxes, then the businesses that are in that industry would have to adjust and, make changes in the way they do their business, maybe in their pricing and their costing, anything that could help them ensure that their profits or their revenues are maintained or maximized, right? And then, of course, there's also the issue of timing. Sometimes politicians would talk about, especially during campaign period before the election, they would talk about what they would do during their term, and then sometimes those plans would have some effect on some businesses, but then they get elected and then there's a term period, right? And sometimes it would take a while before those plans that they said would be imposed. Like they said that they're going to create this law or something that would affect a certain business, and the business is already preparing. And then, it would take a while. Let's say it would take a year before the law is passed or discussed in the Congress, in the Senate, in the BICAM. until it was approved by the president. So it would take a while. It would take some period of time, and sometimes the timing is also an issue, right? Of course, and then those are just some examples under political factors. And then you have economic. Of course, you have your natural law of supply and demand. But of course, there are also other factors, like hoarding. You have your African swine flu, ASF, affecting the pork industry. And then I think essentially the pandemic as well, that's having a great impact with how businesses are conducting their operations nowadays. And then for social, how people react to certain goods and services, especially delivery. Currently, more and more people are, what do you call this, finding it easier to order things online rather than going to the physical store or shops. Okay. And then technological, more and more businesses are, what do you call this, getting their business to have online presence and allowing their customers to order their products online, right? Or for services, delivering the services through online, through an online setting as well. Meetings are being done on different means. You have your Zoom, you have your Google Meet, Hangouts, and there are others. And then, of course, there's also, what do you call this? On the other hand, there's also the fact that there's a certain industry that is continuing to introduce more and more technological products, especially apps, fintech, financial technology. There's, what do you call it? There's a lot of banks cropping up, like, CIMB, ING. These are digital banks, right? And they are, in a way, not really disrupting, but they are eating up a share, okay, from the market, okay, from the traditional banks that we have. Okay, so in a way, they're very innovative with that, and they really utilize technology to their advantage. Okay, so we have that again, PST analysis. So the considerations factors being studied in this one are the following: political, economic, social, and technological, and of course relating to how the market reacts to those factors, and those are being used to shape the overall business strategy of the business. Okay. Next, we have Porter's 5 forces analysis. So this is a significantly less frequent market analysis tool, but it's still equally valid. So 5 factors being considered here: supplying power, buying power, competition, threat of substitution, and then threat of new entry. When we say supplying power, so you have your whole market, right? And then the whole market presents the total demand for a particular product or service. But as an individual business, you can only supply depending on, the capacity of the operation. How much can you supply to this market, right? Let's say there's a demand totaling 100 million for the whole year, but you can only supply, let's say, 10,000 a month, right? So that's your supplying power. You have to consider the capacity of the business. How much can it deliver for a given period of time, right? And then you also have the buying power, okay? In regards to buying power, it's more on the utilization of resources, because businesses do have limited resources, financial resources. It's going to be, balanced out with their supplying power. Yes, you can supply this much to the market, but can we, what do you call this? Can we financially support that much supply, right? Because, sometimes we could have a lack of budget. How much resources can we buy to supply that particular amount of goods or services? Okay, so that's also a factor to be considered. And then there's the competition, which is the leading company, how much market share do they have, and then who else are, considered greater than our company, performing better than our company, and then which ones are, just small players, not performing as well as we do. So those should be considered. And then as much as possible, as a business, you'd like to have more share of the market, right? Because more share would translate to more sales and more revenue. Okay. And therefore, sometimes if you're keeping an eye on your competition, what they're doing, what kind of products are they introducing to the market, can you do better? Can you introduce something something more functional, maybe something more better looking appearance wise, or something more affordable to the market, things like that. And then you have your threat of substitution. You have your product, but maybe another company would, introduce a certain product that could act as a substitute for your product. So in a way, that's also it's not really competition because it's a different product, but there is a threat of substitution there, because instead of buying your product, they might opt for the other product, which is essentially doing the same thing, maybe. Okay, so it's substitution, right? And then you have the threat of new entry. Normally, this is for, red ocean businesses, because it's a highly saturated market. So more and more people, it's much easier for new businesses to crop up, right? So there's such threat of new entry. And then for blue ocean businesses, of course, this is a much serious situation compared to red ocean, because normally for blue ocean, they are significant players, because there's not many players yet, and so if you got a competition, it's going to be a serious competition, because there's no leader yet. Although you might be first, there might be a second one, third one, and they might be doing better than you. Okay, so there's the threat of new competition, new entry. Okay. Like SWOT analysis, Porter's 5 forces analysis is as useful for strategic market analysis as for any other type of analysis. This is because it can be applied on the macro and micro scales to overall business strategies and to individual business decisions. Okay, so those are just 3, although there might be other tools that could be used in conducting strategic market analysis. Okay, so the pros and cons. So the advantages or the upside to strategic market analysis, of course, you can make more money by understanding the market better. Then you can create decisions that would allow you to increase your sales, increase your revenue, get a better feedback or response from the market, right? Maximizing profits. Strategic market analysis can be a fantastic way for your organization to make more money, since it will help uncover otherwise hidden business opportunities. Then you have conquer competition. If you use it properly, then you're probably going to attract other customers who used to buy their products or services from other companies. Then they would come to you. So anyway, that's how you conquer competition, because you understand the market better when you conduct a strategic market analysis. And by doing so, you can attract them to do business with you instead of the others. And then next is avoid bad decisions, because essentially you have something to base your decisions on. You have made an analysis, you've made a study, you've done your research. So the results of those research should help you to make better decisions. Okay. Identification and subsequent avoidance of bad business decisions. Every idea is a good idea in principle, but when you start researching and analyzing the strategy and its relevant market, you may quickly see how the plan will fall through. Okay. Sometimes it's easy to, assume things that the market is going to react this way, or the market is not going to accept that, or the changes would not be very well received. But when you conduct a study, when you conduct a survey, then you'd see that, they're reacting positively to the, proposed changes, or they are actually suggesting that we make these changes. So, you can't be sure until you actually ask the market what they want, right? You can't just assume what they want, okay, based on your own preferences, because normally that doesn't work well, okay? Downsides to strategic market analysis. First off, time taken. It does consume a lot of time, because you're going to have to conduct research, your study, and sometimes, finding the resources alone, it's going to be very hard, especially free resources. And if you want to get, what do you call this? Resources that have been compiled already, that have been conducted by an actual business doing research or specializing in research, sometimes you have to, fork out the money or pay premium to get those information or analytics, right? So it could be, either time taken if you're going to conduct it yourself, or money if you're going to get the information from another business, a research company. And then you have bad results. In rare cases, strategic market analysis may lead you to making false conclusions. If this is the case, it may cause you to miss out on otherwise profitable business ventures. So sometimes, although you have the information, it could either be, timeliness. Sometimes certain trend changes very quickly, especially in technology, that, during this few months, this particular app is doing very well, and then the next few months is already gone. Nobody is talking about it anymore. So even if you've had your research, even if you've had your results, then you can still make bad decisions based on them, right? So it would depend again on the situation. Again, it would depend on the industry, the product, and the target market, okay, or the market group, okay? How to conduct strategic market analysis. So of course, choose the market analysis tools for you. So they provided 3. You have your Swot, you have your PST, and then the Porter's 5 forces. Okay, and then you have to determine which ones would you like to use. Okay, and then of course there are other tools as well. You can research them out, or maybe later we go through them. Maybe other articles will be providing them. And then gather data from a variety of sources. This one is, the most time consuming of this. You have to conduct, you're going to need plenty of data. Go into plenty of depth on what kind of data you'll need. Tapos, market reports of your industry and see what information you can find. Sometimes we have, the Department of, I think NEDA, Department of Trade and Industry, they do provide certain studies or reports regarding different industries that we have, the overall performance. So that could be helpful. And then sometimes there are private companies, private firms that also do research, like financial institutions, especially banks. Sometimes they do. And then there's also private companies. They also provide, but sometimes it would be applicable only to their company, right? But sometimes they do provide it to the public, maybe after they've used it, so that they could, back up their claims, or maybe to explain their current performance, or to, entice more investors for them. There are a variety of reasons on why they do it. But mostly it's confidential while it's still ongoing and being implemented. But after it was implemented, I think it's safe for them to release the information to the public. Alright, and then of course, conduct your market analysis. When you have your data, then you have to, go through the details, the information, how it's going to relate to your particular business, how it's going to affect your business, and how you can maximize the results or the benefits for your business. You'll want to draw conclusions from each tool and see what kind of overarching decisions you can make regarding your organization's business strategy. Again, you have to align it with your strategy, which is aligned to your goals and objectives. Okay. Strategic market analysis isn't a concept that's been extensively discussed because it's very general, and if you want it to be a specific discussion, you have to take into account the industry, the product or service, and the market group, okay? But it's any market analysis relating to the overall strategy of your organization, or even the individual decisions you make within that organization. So it's got plenty of benefits, and we definitely suggest you try it out because, it's essentially analysis. When you're making decisions, you have to make sure that you're basing it on something, on a study, on a research, okay? So they can make better recommendations. It's very difficult to make decisions when you have, nothing to base it on, right? So analysis is a very good way of doing that, supporting your decisions. Okay. So that's it for this one. We'll go to the next. But it's still about strategic market analysis. Okay. So that's it for this one. Thanks and bye.